Well, we're back with you. I hope you're having a good Thursday out there. I'm Marlon Bowling with you, and I want to welcome aboard to the show Mr. Ted Seifried. He happens to be with Zaner Ag Hedge, and he is located in Chicago. And Ted, tomorrow we get USDA's big reports. We've been talking about them, it seems like forever. And what they will be the quarterly stocks report. And again, I just want to clarify for everybody, that is not ending stocks. These are quarterly stocks. And then we'll get USDA's best guess at planted acreage for this year, too. Can you explain to our audience the difference between ending stocks and quarterly stocks?
Absolutely. And I'm glad we're doing this, Marlon, because I'm seeing a whole big Twitter debate or social media debate on what the USDA is going to say for yield on Friday. Yeah. And that's not something that we're going to see. That comes in a WASDE report, which happens in the next one for that will be the July WASDE report. Yes, quarterly grain stocks are a look back at what the disappearance was in corn and soybeans and wheat for the last quarter, the last 3 months. We look at that because that disappearance gives us a very good idea of where the demand stands. It's a look back. It's not a projection forward like you see on a WASDE report when the USDA is projecting what the ending stocks will be for the next marketing year. It's a look back, right? So that is very important to know. It's actually, in my opinion, one of the best reports that we get per year because it's hard data. It's not anybody's guess. This is where stocks stood on farm and off farm at the end of that quarter. And then the other one is acreage. Right, and that's a survey, right? That's not the USDA pencil pushers coming up with their figures. It's not a statistical analysis. It is a survey that is taken of like 12,000 farmers, I think, is how many they've been having the last few years. And it's a rather accurate one for that matter. So we will be seeing some hard and fast numbers on Friday. These are numbers that we really can't argue with because, again, they're not projections for the future. They're reporting what is actually happening and what has happened in the recent history. So again, it's a big report. And in my mind, it's one of the biggest reports of the year. What I think is very interesting, Marlon, is that when you look at planting intentions versus what analysts' expectations are for this report, they are nearly identical. And if you would have asked a lot of analysts right after planting intentions came out, I think a lot of people would have said corn's too high, beans are too low. But then now, apparently analysts have changed their minds. And I think there's a couple of reasons for that. One, we were off to planting like gangbusters. And in years where we plant fast, we generally plant a little bit more corn. Also, prices of inputs for a lot of people dropped fairly dramatically from where they were in the fall to where they were in the spring. And you might have had a fair amount of guys saying, hey, if I average in my costs on the inputs, that makes my farm average better. That might not be a terrible idea. So for a couple of reasons, I think the trade might be right about looking for corn acres to be consistent with what we saw in the planting numbers and for bean acres to be slightly consistent, well, slightly higher than what we saw in the plantings numbers. But it's very odd to see that because usually we see some pretty decent changes between planting intentions and what the final acreage numbers are. And again, we're not looking for that. So could be a bit of a wild card tomorrow. And then don't sleep on quarterly grain stocks because, you know, we've had quarterly grain stocks steal the show in the past. Now, the July soybean contract in particular has been suggesting that maybe there aren't as many beans out there as what we were expecting. That would show up in a quarterly grain stocks report. And if it doesn't, well, I don't know. You know, it could be a very interesting and wild day on Friday. But if these numbers come out pretty close to expectations, we'll go right back to trading weather.
Good point. Okay, let's take a look at where we're trading right now with our live quotes. They are provided by bar chart. On the corn board right now, we have turned lower again. We're down 3.5 cents at 527 3/4. Remember, we had been trading higher overnight and then finished kind of weak overnight. So we've been chopping around both sides of unchanged. You have December corn now down 3.5 at 533 1/4. So it hasn't ventured very far from unchanged. Now on soybeans, they're chopping around too. August now a 1.25 pennies lower at 13.59 3/4. When we came on the air, it was actually higher. September 2.25 higher. November is up just 3/4 cents. And when you look at the wheat market in Chicago, we have September now a nickel higher at 6.74 3/4. So that one is doing okay, and it's led by that September contract. In Kansas City, it has turned higher with September up 2.25. We're at 8.08 per bushel. And on the Minneapolis spring wheat trade, you have September up 9 3/4, kind of in its own little orbit. It's now at 8.28 per bushel there. That's about 11 cents off of its earlier low this morning. All right, let's bring back Ted Seifried in a moment, and we'll take a look at our livestock trade here on a Thursday. We'll be right back. Now to livestock. And we continue with Ted Seifried of Zaner Ag Hedge. On the live cattle trade, we opened up about 30 to 40 lower on average. Now we're starting to sag a little bit, and we have the August live cattle currently trading 92 cents lower at 172.95. Now we're only about 3 ticks from our low of the day. We're off of our earlier high by $1.10 right now. And it's interesting where the losses get a little less as you go further out in time. So the most weakness is in that nearby August contract. Now, if you look at the feeder cattle trade, you currently have the August down 77 cents at 239.47. That's $1.40 off of our earlier high this morning, and now we're within 20 cents of our low. Now, we have September down 65 cents and generally about 60 to 80 cents lower across the board here on the feeders today, at least for the moment anyway. Lean hog trade, well, we have August now turning lower by half a dollar. We're at 90.60. And it had been as high as 91.05, but kind of sold off from that. It had also been 80 cents lower than where we are, so there is that to consider as well. Let's go back to Ted Seifried here. Quarterly hogs and pigs report coming out later on today there, Ted. I don't know if that will mean much in the bigger scheme of things. How do you look at it?
You know, I mean, it's just kind of the same as any other report we look at, Marlon. If there is a big miss, if it's a big change from what our expectations are, well, then that could have a big influence on the market. But if it's fairly similar to what we were expecting, then we'll go back to trading the fundamentals that we had been trading, just moments before. It's interesting to see the grains not having a big influence on livestock here today. Obviously, the grains aren't moving around all that much in front of a big report on Friday. So livestock kind of left to their own devices. And what that means is that you've got a little bit of a cooling off. Obviously, feeders had been much stronger earlier in the week because of corn really dropping very hard. Live cattle had followed, but now we're kind of just simmering down just a little bit. There are some concerns about what happens to cash once we get past the July 4th holiday weekend. That's really what marks our peak grilling season demand. After that, we kind of slip into sort of the summer doldrums where we aren't, as aggressively out and grilling and things like that. But then it picks up again for the Labor Day holiday. And then as far as hogs, we've had a really nice bounce off the lows. We've kind of reached a level that I'm going to say is maybe value level for now, carving out maybe a little bit of sideways trade before we decide which way we're going to go from here. A lot of that might be influenced by what happens with the cutouts and also possibly what happens with grains.
Interesting stuff. All right. Well, thank you so much, Ted, for taking time to talk with us. I appreciate that. And I'm sure we'll be checking in with you here real soon. Once again, Ted Seifried of Zaner Ag Hedge. He's located in Chicago. I want to take a quick look here at the Dow and the outside markets, too.